Hi everybody, welcome to another update on the stock screener. Today we are going to talk about Prospera Energy. We have an update on the presentation, so there is new guidance. Market cap fully diluted is still 50 million. So let's take a look. So first of all, they have a new chart with how the production is going to rise, and it looks like they want to increase the production by 3 times in just 2 years. So it's very ambitious, but let's see if they can do it. So what am I talking about? These are the new numbers. So to the right are the new numbers, to the left are the old numbers. Let's check them out. What has changed? So in the previous update we had 1,600 gross barrels for this year, and now it's 1,297, so it's down. And the earnings were 21 at 77 oil. Now it's 73 oil and lower barrels. And as you can see here, net income is lower, 14. So the guidance is down, 1297 it is now. So let's put 1297 instead of 1601. 1297 was, yeah, we know that it was higher. So that's already bad news. And we also know that they only have like 78% working interest on that. So net, it's about 1,000 barrels for this year. For next year, we had 3,187, and now we only have 2,253. From 61 net income, we are going to 26 net income. That's cut in half. So that's also not good. 2253. Okay. 2025. We don't have numbers for 2025. So what are we going to do? Let's just add 1,000 to it. So that's 3,253. And for 2026, we are never going to get to 10,000. So let's say maybe 5,000. So these are the new numbers for production. We are currently at 75 oil. So the valuation for this year is lower. For next year, it's higher. There is a double possible for next year, 2024, end of 2024. So there is still upside. But of course, let's look at the costs as well. maybe the costs have changed. So what were the costs in this scenario? So what are the costs? Lease operating expense 9163765, right? Divided by production, 1601, and for the whole year. So 15.6 is the operating cost. 15.6. Yeah, I took 23 to be conservative, right? Now let's take a look at this scenario. So the costs here are, well, look at this, there is no GORR here. That's gone. I don't know why. Total royalties, 5. Yeah, apparently the GORR is gone. Okay, let's see. So 10 to 79699 divided by 1297 divided by 365. Costs are much higher this time. 21.7. That's not good. Okay. Yeah, that's because they have less barrels of oil, of course. General administrative expense is around the same. Interest expense a bit higher. And the rest I don't look at. But you can see here, it's about $6 higher. Right? $6 higher. 21.7. Yeah, so let's take 26. Just to be conservative, because they have winter problems probably. So I take 26 for this year. Doesn't matter a lot. Still lower than the market cap right now. Okay, so for 2024, we have this divided by, so $10 for 2024. And here we have this divided by 2253, $19. That's up $9 from last guidance. and this to this is about down $6 to $5, and from here to here it's down $2. So the costs have gone up a lot. So this is only down $2. So what are we going to do here? Let's take 23, and here we don't know, it can be 17, probably higher. It's 18, 11. So not good. We have higher costs, also higher interest. Let's see the interest. What did I take as interest? Yeah, 400,000. It's about 400,000. Yeah, just keep it here. SG&A can be $2 million, 2.8. Here it's also 2.8 to 3, 2.3 to 2.9. Yeah, let's take 2.5 because they have hired some people. CapEx, yeah, they probably need 10 million to drill another 10 wells. So that's good. So I think we're done here. We have all the numbers. We have the production. And we have our cost estimates. Let's take a look at the updated balance sheet numbers. So this is the new numbers, and these were the old numbers. 2023 we had 10 million equity. Here we have 20 million equity. That's weird. They have higher equity now. Not sure why. 52 total assets. That's the same. Debt. Yeah, here we have more debt. Here we have less debt, so 29, here 48. Why is that? A little bit less assets, retirement obligation. Long-term debt has gone down. Okay, so they have paid off some debt by raising money. In 2024, we had 70 million equity. Here we have 50 million equity. Well, it's not bad. We are currently at 50 million market cap. By the end of this year, we should be at 2 times book value. And by next year, 1 times book value. So it's not that bad. There's still hope. This is a profitable company. according to this guidance, we should have 15 million net income gross, of course. And then it goes to 26 million. So it's okay. It's a profitable company. I don't expect it to go down or crash. At least if they do what they say, if they get that production up, then this might even go up. So this is now the latest chart. We are currently at 75 for the oil price. That's also what they guided here, 75, and then going to 70. So for this year, I said there's no upside for this year, no free cash flows. But for next year, yeah, we should be fair value. So for next year, production should be higher, cost a bit lower. Yeah, they will have enough cash flow to drill more wells for next year. And then we will get to here. Not too much upside, but yeah, it's okay. And then for 2025, we will add some more barrels and then we go even higher. So if you just hold this long enough, it will go up. Balance sheet is pretty clean. When you look at this, 52 assets, 30 liability, 20 equity. So that should be okay. And then 80 assets, 30 liability, and 50 equity. So plenty of cash that can come in the coming years if they can get to that production. Okay, so that was the update. I still think we are fine here. Just need to wait a bit and be patient. And I'll see you in the next video. Bye.